Some might say the data has been underwhelming, many investors gripping to the silver lining.
The market is confirming that we're getting good macro data.
You have some tangible catalysts on the horizon.
The key driver of the slowdown was a collapse in trade activity. So if you restart that, you get that external stimulus restarting, and I think that helps drive that turn.
I'm hopeful that actually we can get the Chinese wheel spinning, and I think that will create a more robust global economy.
The consensus has been the U.S. is about to slow, about to slow, about to slow, and it doesn't. So it keeps on exceeding expectations.
We're in a bottoming phase right now.
Signs of China bottoming out right now.
We're optimistic that China will actually stabilize and will not become a negative for the global growth outlook in 2019.
Joining me now to discuss around the table is Michael Purves, Weeden Chief Global Strategist, Jon Mackay, Schroders Senior Market Strategist, and Bloomberg's Lisa Abramowicz with us as well. Guys, let's start with the data. The silver lining, Lisa, where is it in the Chinese data?
Well, people are saying that it's not slowing as much as they thought, and that you're starting to see a small uptick in expenditures by businesses. You're starting to see a small uptick in optimism. But these are really small silver linings, and people are grabbing onto them to get a sense that perhaps the stimulus is working. But the key data, I think, will come later in March when we get the manufacturing data out of China, which is expected to be somewhat weak.
John?
Yeah, no, I'd agree with what Lisa just said, but keep in mind that the markets are discounting mechanisms, right? So they're looking forward to when that turn will come, and even those little sort of drip, drip, drip of positive data, I think, is telling us a story that, at the very least, it's not getting significantly worse, right? Which is where we were about a month to 2 months ago. Plus, you've got the China trade deal maybe on the horizon over the next week or two, so that could be something that sort of adds a little bit of certainty around where we go from here.
Interesting to look at the investors' reaction, though, to these different data points through the week. We had some dreadful China PMI on the headline numbers. Market looked straight through it. Any kind of encouraging sign in the data, Michael, and the market is bid up off the back of it. What does that tell you?
Well, look, I mean, there's been a reversal in sentiment from the dark days of December until what we've had right now. And I think, you look at volatility right now, the day-to-day closes this week have been, 10 basis points and under, one day after the other. The market's sort of at a standstill, but with a bullish tilt here. I think, look, at the end of the day, I think the market has gone through this realization that, the cycle, we're maybe not quite as late cycle as a lot of people thought we were back in October.
Lisa, very skeptical.
Well, I think that the ultimate question here is how much ammunition does China have to stimulate their economy? And I think that is something that I have not heard a clear answer from anyone on, and I don't think that people really know. And so right now people are betting that not only does China have ammunition, but they're using it, and that everything's going to be copacetic. And I just wonder if that's a little bit overly optimistic.
Michael, there is immense faith right now amongst global investors that the Chinese policymakers can handle this, that this stimulus is going to work. It will stabilize things.
Right, and you're seeing a little, as you were just talking about, you're seeing a little shreds of this in some of the data we just got overnight, but you're not seeing it confirmed in the Eurozone data. And, increasingly we've seen this sort of connection between a lot of the Eurozone data and the Chinese data. So I think what the world really needs to see to feel better about everything here, China is a key sort of foundational block of that, but you need to see the Eurozone start trending better there.